Good morning and welcome. It's that time once again, the Patriot Radio News Hour on a gorgeous day here in the Valley of the Sun. I'm Joe Jaquin, CEO of the Patriot Trading Group. It's like 80 degrees outside right now. I wish I was on the golf course, I'll say that. It's the return of Tiger Woods. Yes, the Masters is underway. In case you're wondering, he's even right now through 4 holes. I only bring that up because, as you get older, you slow down and you can't do what you used to do. And we used to, a group of us, back in the day, I lived in Anthem up here in Arizona, in North Phoenix, if you will, just outside the city limits. And they had this big master plan community, and they built, 30,000 homes, something, maybe not that many, but pretty close. And me and my buddies, we all played on the same basketball team together, the men's league team. And we're all too old now, right? We're too old, and we can't play in the men's league. But last night, we all met up in Anthem. I drove up there, and we did this Masters pool. And for you, if you're not a golfer, you don't know the Masters, one of the golf majors started today. And the funny thing is the place where we would normally go was crowded. And I was like, wow, man, it's crowded. And one of my buddies said to me, it's wings night. And I'm like, okay. Wings, bar food, right? Okay. And I didn't really understand why that was such a big deal. And we went to the other place, the other establishment up there. And then I found out, because I was hungry. My wife and my kids, they're on spring break and they're not home, so I'm by myself. And so I was going to eat while we did this little golf thing. And in my mind, I maybe because my friend said, I was like, I'm going to get some wings. A dozen wings was $16 at this place. I was like, I don't know. I don't do a lot of that stuff, eat at the bar. But when did that happen? I mean, they used to be, back in the day, you could have a dozen wings and it'd be like $6. But even then, even now it'd be like, maybe $11.99. Maybe $1 a wing. No, $16. And then I got to understand, and no wonder why the other place was crowded. Hey, you can buy a dozen wings for less than $16 tonight. But there's no inflation. But then again, that's why I'm here. Wealth insurance, the hedge against what the Federal Reserve tries to convince you is not true. Of course, talking about legal, lawful, spiritual tender, gold and silver. Our toll-free number, 800-951-0592. The website at allamericangold.com. All the articles, the videos. We got a, really interesting, and it is every day now, right? I mean, the Dow moves 1% every single day, it seemingly feels like. Today, right now, it's up 300 points. So yesterday, it started out down 500 and finished up. Today, more of what they're calling the relief rally, as they're now convinced that the trade war with China won't be too bad because they're going to make a deal. And they had Larry Kudlow on the idiot box today, and I'm fine with it, right? Hey, great. If you have changed your mind and are willing to come out and just say, hey, listen, I was wrong, and I apologize, America, for ever promoting this free trade and allowing China to go, I would have been okay, but that's not what he's doing. Right? He's trying to act like this is all part of the plan and whatever, and it's a bunch of nonsense. But two very different and very interesting things are happening. In the United States, we're getting it's all going to be fine, right? And we've got a plan. And really what they're really saying is, hey, it's not going to happen. We're going to make a deal. Because there's I guess a grace period, 60 days from a few days ago. I guess, let's call it since Monday, is when the actual tariffs will kick in. And I believe that's on both sides, for us and for them. And, hey, we're going to negotiate. And remember what we said yesterday, Kudlow, it's a pot of gold, right? So we get it's going to be great here in America speech. What was interesting is I was wondering what they're saying in China. And would it match? Are they worried? Or are they talking about how they're going to have to give in to the United States? Because that's the message we get here. Very interesting things that China's doing over in China compared to what we're doing here. And I'll say this, it's very, very similar. Matter of fact, I would even dare to say the Chinese perspective on what is happening is actually very different than the perspective the mainstream media here wants us to believe. We're going to compare the two today, and then also one of my, I've got a core group of guys that I think really, they tell the truth. How about that? I guess that's the simple truth tellers. Jeffrey Gundlach is one of those guys. He was out yesterday. You're not going to miss what his thoughts are about where gold's headed and where Wall Street's heading. We got all of that coming up for you next. Patriot Radio News Hour on Tiger Watch. Who's winning? Who's losing? And what will it all mean? You know what? I don't know. Here's what I do know. The trade deficit numbers came out today. Is a 10-year high again, smashing all expectations. The number was $58 billion was the trade deficit for last month. But here was the thing. If you did it in goods, so in other words, here's stuff, physical stuff coming into the U.S. versus physical stuff going out of the U.S., it was $77 billion. The difference in the two numbers had to do with what they call services, and that's really banking, right? Because part of what we really realized what free trade was really all about, besides exploiting cheaper labor, was the banking industry wanted to give out credit cards and, put the Chinese people into debt too. And apparently they raked in $19 billion in, I guess I'd call it fees of some sort, which brings the number down. But actually goods to goods, $77 billion. And total trade deficit, $57 billion, almost $58 billion. And part of the reason why, and I gotta say, the fact that anybody can argue the point when you look at numbers like that, because remember what that really means. That is wealth leaving America. At the end of the day, when you put all the BS aside, okay, forget about tariffs and forget about free trade and forget about globalization and protectionism and all the other words that the trade wars. Just when you look at it, and it's when you get right down to it, at the very bottom, buried beneath all the bull crap, what does a trade deficit mean? And the trade deficit really just means this is the amount of dollars coming in and or leaving your country. Right? So this counts foreign investors buying our stock market, us buying foreigners' stock market. This also involves banking fees. This involves trade. I mean, this is it. It takes everything into account. And you think about the fact that we're losing, $600-700 billion a year, every single year, and then it starts to really add up, doesn't it? And so now we got this trade war, and we're trying to give the impression that we're winning, right? Rightfully so, right? We want to prop up everything. And if you caught Larry Kudlow today, maybe you didn't. He was on Fox, and he was doing the cheerleading thing, which he's really good at. He pay no attention to what he said every other day of every other year for the last 20 years. Just pay attention to what he says today. But what has China been saying about it? If you want to know, the Global Times is where you go to find it. That is the Chinese state-owned media, and that's their English language newspaper. Okay, so there is a way. Listen, the Chinese will let you know what they're thinking. Barely a day after China dropped the hammer on U.S. stock markets by unveiling a retaliatory tariff of $50 billion on U.S. imports, that unlike U.S. measures that mostly targeted obscure industrial products, right? Some of it we're still not really sure. They're stealing our intellectual property. We hear that a lot. And just remember, they steal it, and they use the word steal, because our corporations allow them to do so. It was clearly written that, hey, if you want to build stuff here, you got to turn over all your stuff to us. Actually struck at key industries like soybean farmers, automobiles, and airplanes. The Communist Party crowed about what it already sees as its victory in the trade war in the editorial published in the Global Times. China has swatted away claims by the United States. It's so funny that this was not me. I did, just so you know. I just saw this, and now he does it. Repeated most recently by Larry Kudlow during the interview in Fox News this morning. So this is how quickly things have come out. As soon as he came out on TV, China came out with an answer that China has somehow victimized the United States by its trade agreements, while gloating about the leadership's decision to strike at a massive weak spot for the U.S. economy. While it's a tit-for-tat tariffs could hurt both economies, the damage to China's economy caused by the U.S., what they call Section 301 tariffs, pale in comparison to the damage that China will do to the United States. To illustrate the point, a Chinese cartoonist showed another way that Beijing is putting the squeeze on the United States, and it has, and we see, right, we do a lot of that here, right? A cartoonist will draw a picture, of something. So on the one side, you have they're embraced in like an arm wrestling hold. So you got on the left the U.S. arm, on the right it's got the Chinese arm, right? It's got the Chinese flag on the bicep and the American flag on the bicep, and in between the hands, they have the stock market bull. Right, it's got a little U.S. flag on it, and it's being squeezed by the Chinese. This was the cartoon illustration that was in their paper. standing up to America's bullying tactics. China warned that the pleasure the U.S. had derived from its sanctions in the past will now cause them suffering at their financial and political gains diminished to zero. This is Beijing's clear show of retaliation towards the tariffs on Chinese products. And the article went on to say, hawkish politicians in Washington have obviously overestimated the capability and the endurance of the U.S. economy in a trade war. Since they believe they can do whatever they like, China has shown a great deal of restraint for now. But if the U.S. persists in this trade war, China is ready to fight to the end. So I just thought that was kind of interesting, their stance in what they're writing about in their own country. Again, this is their English publication. If a trade war happens, China will show that it has just as many reserve plans as the U.S., if not more. China experts suggest that China could even strike and take actions to weaken the strength of the U.S. currency. Since China is the world's largest trading economy, remember I keep telling you that. They keep trying to, here at home, we want you to believe China's number 2, right? Because their GDP in dollar terms, they're at about 15 trillion. You know, we're close to 20 trillion. They're about 15. But in terms of actual stuff, they're number 1. And so they said that we'll take action to weaken the strength of the U.S. currency, calling themselves the world's largest trading economy and the largest buyers of commodities, and they specifically mention oil. China could use its influence to push its own currency in global markets to reduce the dominance of the U.S. dollar and strike a heavy blow to Washington. So, again, I don't know, right? I would love to believe that we have some hammer that I don't know about. Right now, the way I look at it, right, we already are at a weakened state. The Chinese know it. The rest of the world knows it. Oh, by the way, just coming in. China has now filed a complaint with the WTO over the U.S. tariff. So here you go, right? China's doing it both ways. We'll go use the system that America put in place, right? The WTO. We'll do it that way. We'll do it this way. It's going to be very, very interesting. We don't have a very good hand. We would need to, and I think China's right, we would need to see a significantly lower stock market if we want to win. And we would need to see significant increase in prices of all electronic devices. Quite honestly, if we want the intellectual property back, we need to bring the development and the production of these products back home. Right? $1,000 iPhone, maybe it's got to be $1,500. Maybe it's got to be $2,000. But otherwise, I don't see how we win. And this is kind of the bigger issue here. The first round, going after NAFTA and the North American Free Trade Agreement, that's one thing, right? Because that's what Canada and Mexico, some of the Central American countries that, people keep coming here illegally, not very strong players, right? And the United States can kind of dominate. This is a different animal. The Chinese want the world to know, hey, we're the largest trading economy in the world. We trade more with the rest of the world than the United States does. We're number one. And if you want us to exert ourselves, we will. And basically what they're really trying to say is our people will tolerate more pain than you Americans will. I mean, really, that's what they're talking about, right? You hear us talk, oh, they hit soybeans to go after Trump. And there's not enough soybeans in the world for them not to buy from the United States. They didn't say they weren't going to buy. They just said we're going to put a 25% tariff on it. Does that mean stuff's going to cost more for the Chinese people? Yes. Yep, sure does. And what they're saying is, hey, our people will take it. What they question is, can the United States take it? And at least in their state-owned media, they don't think we can. And you know what? I don't want to agree with them, but I don't think we can either. So it'll be interesting to see. So just remember, we're going to have to talk a lot about this because in the next 60 days, if there's no deal reached, that's when things get interesting. When we get back, one of my top 3 favorite people I listen to coming up next.
This is the Phyllis Schlafly Report, the conservative pro-family broadcast of Phyllis Schlafly Eagles, a leading voice for the sanctity of life, traditional education, the Constitution, and American sovereignty. Now, here's the president of Phyllis Schlafly Eagles, Ed Martin.
When President Trump announced he would impose tariffs on foreign-made steel and aluminum, naysayers of both parties rushed to the nearest microphone or camera. Pundits and politicians alike pretended to be shocked that Trump meant what he said as a candidate, and that he actually means to deliver what he promised on during the campaign. The swamp is not happy, but cheers rose from the manufacturing belt that runs through the states that put Trump in the White House: Pennsylvania, Ohio, Michigan, Indiana, Wisconsin, and Iowa. This is a good thing for the steel industry and for our country, said Tim Timken, the fifth-generation leader of Timken Steel, which has 3,000 employees in Ohio. We're standing up to our foreign competition and essentially saying enough is enough, he added. Foreign lobbyists warn of a new trade war, but U.S. Steel CEO David Burritt pointed out that we are and have been in a trade war for decades. Countries which have economically prospered by creating our current trade imbalance will now face repercussions to their own economies if they choose the path of retaliation. Peter Navarro, director of the White House Office of Trade and Manufacturing Policy, debunked the notion that the United States could lose a trade war with Europe or Asia. We are the most lucrative and biggest market in the world. We have the lowest tariffs in the world. We have the lowest non-tariff barriers. We are the free tradingest nation in the world. And what do we get for that? Navarro asked. We get every year a $500 billion trade deficit that transfers our wealth to other countries and basically offshores our jobs and our factories. Critics are exaggerating the cost to consumers by adding a tax to foreign-made steel and aluminum. Commerce Secretary Wilbur Ross found that the aluminum tariff would add just 0.6 cents to the cost of a soup can, while the steel tariff would add about $175 to the cost of a $35,000 car. The rest of the world wants unlimited access to the American consumer without complying with American regulations or paying American taxes. Under my administration, Trump boasted in February, the era of economic surrender is over.
This has been the Phyllis Schlafly Report from Phyllis Schlafly Eagles. As President Trump fulfills his campaign promises, his accomplishments on trade, immigration, the economy, and protecting the unborn should be celebrated, not ignored or diminished. To track these victories, go to phyllisschlafly.com and find out what's next for the Trump presidency at phyllisschlafly.com. Thanks for listening to the Phyllis Schlafly Report.
So who's gonna be able to take the pain more, us or them? That's the Chinese position, and they're betting it's gonna be them that can take it better than we can. The Dow, by the way, now still up. It was up about 350 points. Now it's up 220 points as China has launched a formal complaint with the World Trade Organization. So we'll follow that. Again, though, here's the key in all of this. China is coming out. Listen, they're playing to be number one. Right? Their currency, they want their currency to be number one. They trade more than anybody else. They want trades done in their currency. And now they put it right out there in their own English newspapers. This is what we're going to do. And then you have to figure, what does that mean for us? Where are we headed? We've got a lot of volatility lately. I've been telling you that, listen, gold's going to have a great year. Silver a little better in the second half here. When this dust settles here, I think gold is going to be perform obviously much better than what we see the debt markets perform. But Jeff Gundlach, he is a guy that I talk about a lot. He was out on TV yesterday along with some other people talking about where they feel the debt markets are headed and where gold and silver are headed. Ramon, let's play them.
Welcome to Trading Nation. I'm Scott Wapner. The chaos in D.C. giving a boost to the safety trade. Check out gold touching a 2-week high Wednesday as stocks remain volatile. The yellow metal up around 2% this year, but it's not getting as much of a bid as some would think. Have a listen to what Double Line's Jeffrey Gundlach had told me about that on the halftime report earlier today.
The price of gold has been kind of off the radar screen. It's interesting how gold can't seem to get any momentum above 1350, yet it doesn't drop. So that's been consolidating sideways. All three of these markets, gold, the dollar, and the 10-year, are intertwined. And they are all consolidating sideways after big moves. And so it'll be interesting to see which way they break.
Let's bring in the traders now. Larry McDonald is with the Bear Traps Report. Bill Baruch is with Blue Line Futures. Bill, are you surprised that gold isn't seeing a bigger breakout? What do you make of what Gundlach said?
You know, I am a little surprised that we didn't take out 1360, but this is a big level up there. I do agree with Jeff Gundlach and the fact that it's consolidating very well. And you really got to back away from the forest to really see these trees. This gold market bottomed in 2015, and it's had higher lows in 2016, 2017, and this has been extremely constructive. I mean, even to a point we almost have a bull flag building since the January spike. One reason I'm extremely bullish that gold is because how bearish I am the dollar. I think the dollar is heading lower. This dollar is unwinding the entire 2014 rally. And I think there's more room to go, another 5%, 7% potentially. And one thing I think is very interesting that more recently has happened is President Trump signed the $1.3 trillion spending bill. And a lot of that, it's going to be the biggest increase in defense spending we've seen in 15 years. If you look at the dollar chart, the dollar index really topped in 2001, 2002. And that was the largest increase in defense spending in decades at that time. So I think we're going to see a lot of pressure on the dollar. And I think gold's going to be have a big second half of the year. I expect it to break out above 1,400 sometime before August or September. And the dollar's going to be a catalyst, but now the trade war can also be a big catalyst.
Yeah, I hear you. Larry, you're a gold bull. So what do you make of the consolidation we're seeing, and do you have any conviction that it's going to start moving higher?
Well, you want to think of the dentists in Cleveland, Ohio. Since Lehman, we've had around 10 major drawdowns in equities, and each time the 10-year Treasury has rallied down to 1.5%, down to 2%. But today, we have a 10% correction in the major equity averages, and you have bonds that are right up around 2.8%, so about 80 to 100 basis points higher. And what's happening is money is going to, I think, flow out of equities and bonds and risk parity. There's about $2 trillion that's moved into this space in the last couple of years, and it's going to move into places like gold. You just don't have the protection. So that dentist in Cleveland, Ohio, over the last 20, 30 years, when his stocks, he's got $1 million in stocks and $1 million in bonds. Normally, if his stocks are down 300,000 or 400,000, his bonds are up 200,000. Today, his stocks are down 300,000, and his bonds are flat to maybe down. So that's going to create a flight of capital out of bonds, out of equities, and into alternatives like gold. I'm extremely bullish at these levels.
Yeah, Gundlach also said he's looking for a negative year for the S&P, so maybe you'll be right. Guys, thank you very much.
Okay, so a couple of things. First, I didn't realize they cut off Gundlach as well. He thinks just like the same thought process as these two other gentlemen. Now, the one part that was funny, and why I wanted to play that clip, was this dentist in Cleveland. Right? Did you hear? I mean, this is what they talk about on the Idiot Box. I didn't. Obviously, if he's right, and the dentist in Cleveland's got $1 million in stocks and $1 million in bonds, right? We all need to be dentists. So I don't know. I'm not a dentist. I know, I think they probably do okay, but really $1 million in stocks and $1 million in bonds? I mean, obviously I picked the wrong thing. To all you kids out there, if this guy's right, be a dentist. Having said that, very important when you really look at things and you take a step back, right? When one of the guys was saying, hey, everyone needs to take a step back. Understand we are in a dollar down trend, right? And he said, hey, we haven't been high 01. Really, if he did a little more research, and it's probably, I get it, he went back, 18 years. If he went back 28 years, heck, if he went back 38 years, that same downtrend that he talks about is still there, right? The dollar's been in a downtrend for 40 years. What is different is what the last guy, the point he was really trying to make. All the other times when the dollar fell, right, and equities were under attack, the bond market could bail you out, right? So if you had as he was saying, a balanced portfolio, what you're losing in the stock market, you can gain back in the bond market. Up until now. Because this is the first time in this cycle where the Treasury yields are rising. This is the first time in, 50 years, really? That we are in a state of rising rates. And the reason why rates are rising, it has nothing to do with GDP. It doesn't have anything to do with inflation. Right? They know the debts are massive, and now China wants to play. Patriot Radio News Hour. We'll be back right after the break. 800-951-0592. We ran St. Gaudens yesterday. I still have more today. They're just cheaper today. $20 Saints, $13.90. If you buy 20 or more, $13.75 at 800-951-0592. Gold's down about $10. Well, $8 to $10. $13.29, $13.30 on gold. Silver's actually up. Silver's up 10 cents today, $16.35. And I'm leaving that price from yesterday unchanged. So $3.85 a roll on U.S. Silver Eagles. That's you're below $3. You're down at $2.90 over spot on U.S. Silver Eagles today at 800-951-0592. So one of the guys that I follow says that the stock market's going to end down for the year, which and don't get me wrong, he's not saying it's going to be down 20%, but it's going to be down. He thinks gold and silver are going to outperform, but the reason behind it has to do with the bond market, and really the bond market is the dollar. The bond market is the dollar, right? And this is what he's talking about. He says, hey, listen, we're in this situation today where the bond market is telling us the dollar's having trouble, right? And why is it? Why is it all of a sudden now, with GDP, if the Atlanta trackers to believe is going to be 2.3% in Q1, right? Which is okay, right? We'll take it. Not great, especially not great considering the amount of tax cuts that we gave out and how massive the debt levels were running. But why is it that all of a sudden now we've got this issue that we didn't have 10 years ago, that we didn't have 20 years ago, that we didn't have 30 years ago or 40 years ago? And the answer really is simple. We've kind of hit that wall where now we're going into big, massive debts, and we're not getting 5% growth. Right? We're getting, somewhere between 2, maybe 3, maybe. And that'll only be short term. And now all of a sudden, at the exact same time, China's coming out and saying, hey, guess what? We want an alternative to the dollar. And so now you have this situation now where the bond market is going, if you're in bonds and you're in stocks, you're going to get hit both ways. So people are going to look for the alternative, right? Because we printed up a lot of money. It's going to go somewhere. And I think, it's a simple thing, and logically to conclude, gold and silver is going to be a logical place for some of that money to go. As they pointed out, listen, gold's bottom's in. It bottomed. The bottom was 2015. It's building a very clear path. And I keep going back to 2001 when 50. Right? Remember, Bank of England sold all their gold, made, the gold's dead. If you go back to the national debt in 2000, when gold was dead, it was $5.7 trillion. Right? We're at $21.1 trillion. We just hit 21 like 2 weeks ago. We've already added $125 billion since then, and we haven't had wait. I think next week we get another one of those big $70-80 billion days. And gold was dead. Remember, because we were going to pay off the national debt. Don't forget that, right? That was the plan. Didn't work. And gold went, built a base, hit a bottom, and then 2001, it creeped up a little bit. 2002 creeped up a little bit. 2003 started to get a little more. By 2004, right, gold was running. And in 2005, 2006, 2007, right, and we're kind of on that same track again. Right? Remember, who was it? I forget. Harry Dent. Oh, gold's going to 200 or 300, whatever ridiculous number he came out with. No, gold's not dead. Gold's patient. You wanted to believe that you fixed it and you did all this great stuff. Okay, we'll wait. And now you see kind of like 2001 again, right? Gold was up in 16. Up a little more in 17, right? It's up again in 18. And now all of a sudden, right, it's starting to pick up momentum. And here's the one big difference. The amount of money that's out there today compared to, 2001, 2002, 2003, it's triple. And that's why I said that first move really from 250 to 1900, that was the warm-up. That wasn't the big move because we were still able to tack on all that debt. We went from $5 trillion to $20 trillion with interest rates still falling. Ever since then, though, what's been happening? Interest rates are rising, the dollar's falling again, and And now we've got this huge divergence, and the answer really is simple. There's an alternative out there. And remember, we can't, I guess you could buy Chinese currency, you just can't spend it here. Hedge yourself against the U.S. Federal Reserve note, and you're going to be rewarded. 800-951-0592, Patriot Radio News Hour. Final segment coming up. $800-951-0592. Just a program announcement. Colorado will be closed tomorrow, so the show will repeat tomorrow in Colorado. We'll be live here in Phoenix. So remember, Colorado, you can always listen in on 1010 KXXT live if you'd like on web stream or get the podcast. We will have a show tomorrow. So if you want to tune in, we got so many options. Now go out to allamericangold.com, and we got Apple Play, Google Play. I don't even know. There's too many to count. We got 3, 4, 5 different ways for you to listen to the show out there at allamericangold.com. So once again, Colorado is closed tomorrow. We will have a show, so if you want to listen, go out to allamericangold.com. We'll have all the options out there along the right-hand side for you to do so. YouTube is another one. I think we even put it on Facebook and Twitter after the show. So all these ways to listen. Our toll-free number today, 800-951-0592. The United States ran the largest deficit since the financial crisis last month. The trade wars, depending on who you listen to. If you want to, Larry Kudlow says this is what's happening and how great it is, and the pot of gold. Which I don't know why they keep referring everything to gold if they don't want you to own it. And then, of course, today I gave you what the Chinese are saying. Vastly different. Matter of fact, China's like, hey, we got a lot more to go. Right? Well, how far you want to take this game, we're ready to go. And by the way, if we want to, when we want to, whenever we want to, we can hit you where it hurts the most, and that's in the dollar market. And just think about just the fact that they said it ought to tell you something. Because you know what? They're not big boast. We like to boast a lot. They don't normally do that. So very interesting comments. And whether it's now, next year, the year after, 5 years from now, make no mistake about it, it's happening. And there's not a lot we can do about it. U.S. $20 St. Gaudens gold pieces. Right? These were the ones that replaced the Liberty Series. Teddy Roosevelt didn't think the Lady Liberty, the side profile of Lady Liberty's face was majestic enough for a country as great as America. And he, of course, commissioned Augustus St. Gaudens to design a new gold piece, which was, of course, named after him. He died right as the coins were coming out. The full-bodied Lady Liberties, the $20 St. Gaudens gold pieces. This was the gold piece right up until gold confiscation. 1 through 19 at $13.90, 20 or more at $13.75, and then, of course, U.S. Silver Eagles below $3, like $2.90, $2.89, something like that. Yeah, $2.89, $2.89 over spot. U.S. Silver Eagles at $385 a roll. Of course, you get 20 silver coins in a roll. 800-951-0592. Everyone take care. Enjoy the rest of your Thursday. And we'll talk one more time before the end of the week.